The Nigerian Exchange posted its biggest single-day gains on July 10th, 2025, as the all-share index jumped 2.01% to close at a record 124,446.80 points. Investor confidence soared, driven by UBA's 10% rally to 39 naira 60 kobo per share, and strong performances by Caverton, FTN Cocoa, and others. With 70 gainers and only 10 losers, market breadth was overwhelmingly positive. Over 1.27 billion shares worth of 27.73 billion naira were traded. Access Holding led activity, with AIICO Insurance surging 9.95%. The NGX year-to-date return now stands at 20.91%, signaling strong momentum in Nigeria's equities markets. We have Oluwatobi Adesanya, equity trader, Zedcrest Securities Limited, joining us now. Great to have you in.
Thank you so much for having me. Good morning.
Right, it's a pleasure. Historic, right? Single-day gains on the NGX July 10th, yesterday, 2025. How sustainable is this rally?
Like we saw yesterday, I mean, the ASI, it's a new record high, which is 124 points. However, we've seen 5% before, like twice. So, but yesterday's one, we had 2.01%. So that was a massive gain, right? So, we can see we have been seeing increased investors' confidence in the market. We've been having positive sentiment. Yes, and and one can even say that, based on the returns that you mentioned, 20.91% as of yesterday, year to date. So it is quite high. So, and it's very attractive for investors, in the stock market, because in the capital markets, we have the fixed income and the stock market when it comes to investing. So if you look at the fixed income right now, so as at the auction that was held this week, the stock rate was about 16.30%. So now seeing the stock market return about 20%. So that shows some investors might want to rotate their funds into the equities market.
Yeah, I mean,
so, and
yeah. Go ahead.
You don't say something.
Go ahead. Let me let you land.
Okay, yes. So in terms of the points, so yesterday's one was a record high for us. We have 124 points. But even today, we have even gone past that. As of when I checked last, it's already at 125,000 points. But for the returns in a single day, so I mean, we have something called circuit breaker on the stock exchange. That is whenever the ASI returns crosses 5% compared to the previous day. So all trading is meant to odds, especially if it happens between 10:15 and 1:45 p.m. And we've had that in 2020, around November 2020, that happened, and trading were odds. So because it crossed 5% in a day, and even 2 years ago we had it crossed 5% level, but trading wasn't altered simply because it was around 1:50 p.m. that it happened. So yesterday 2% was massive, but it is not really the highest return. But in terms of the points, it was the highest. And like I said, today we are already at 125,000 point levels.
Interesting. Let's see if we keep the momentum going. And yeah, it's only fair that this time around NGX takes the shine. Last year, fixed income seemed to take the shine in terms of investments. UBA led the pack yesterday, 10% jump in share price. How do you see this influencing market sentiment and trading activity? Do you also see this rubbing off on other stocks within that sector, other banking stocks?
Yes, I would say the banking sector currently, as of when I checked, not quite low. The banking sector is the one with the highest returns as of today. So the banking index, we've seen about 400 plus basis points already. So currently, Zenith Bank is the one leading the sector. So we've seen the bank rally this morning, followed by UBA and others. So we can say the banking sector momentum is largely positive at the moment. In fact, all the tier 1 banks, so they are all posting gains as of today already. So we've seen the like of First Bank, UBA, Zenith, Access, Core, even GTCO. So we've seen them all posting gains this morning. But yesterday for UBA, as you mentioned, we had about 70 stocks that gained yesterday and just 10 declined. So it wasn't only UBA. So we had other stocks that even did 10%. But for UBA, being it's a one bank to gain 10%, so it shows how impressive that is for us, and we are seeing positive momentum in the market.
So the banking stocks, it's time right now, and it's only fair as well. What other sectors do you think we can look out for aside banking, especially for this second half of the year?
For the second half of the year, I mean, we could look out for other sectors like consumer goods, healthcare, even insurance sector, because for consumer goods sector, all through last year, most of the companies in that sector, they were recording losses. But in Q1 2025, we have seen impressive results for most of them, and we can tie this to the improved economic activities, in terms of the economy getting better, macroeconomic indicators. We have seen reduction in inflation. So, and also we have seen their cost also reduce. So we have also seen the foreign exchange stable to an extent. So all this will feed into their performance too. So and based on the Q1 results, they were largely positive. So we can say that consumer sector is also a good sector to look out for in the H2, as well as the insurance sector. And of course, we've been seeing activities in the healthcare sector too. So far, so good. Banking, consumer goods, healthcare, insurance. Yes.
Interesting. You did not mention oil and gas, but perhaps understandably so. Let's come, yesterday, quite impressive, 70 gainers, 10 decliners. Would you say that this is a sign of overvaluation? Is the optimism justified? Is this a bubble that will soon burst? Are investors just taking positions on dividend-paying stocks ahead of H1 earnings season?
Well, I would say it's not just a cliche. I would say investors are even now more intentional about their investing decisions, because unlike before, like if we check stocks that have the highest returns year to date, we'll be surprised as we'll be seeing some names that probably most investors are not familiar with. We'll be seeing the likes of Beta Glass, let's say FTN Cocoa, Champion Breweries. Unlike before that, we'll be seeing the big guys there. So we can say investors are now being intentional about, looking at companies before investing, looking at what they do, looking at what their strategy is. So, and yesterday, what we saw, so we can't say it's an overvaluation. We can say it is justified, right? Because, even the top gainers, so we have a lot of names, in that chart too, that are not the usual names that we are familiar with, the likes of, Nimet, Mia, FTN Cocoa, Japan Gold, and so on. So it just shows that investors are now cherry picking across different sectors and not just focusing their attention on a particular sector alone. So we can say that the points we reached yesterday, it's justified to a large extent.
All right, so fundamentals are driving these gains from what you're saying. And looking at the share, institutional versus retail investors, how are institutional and retail investors, how are they responding to, we've seen a lot of reforms, how are they responding to a lot of the reforms in the financial sector especially?
For the reforms that we've seen, if we date it back to last year, the one we see regarding, the circular from the central bank that banks should increase their capital base. So if that even can also be tied to the participation we are seeing in the markets right now. Let's say, for example, investor that bought, the public offers, let's say somebody bought Fidelity public offer last year at N$9.25, and Fidelity is currently trading around 20 naira. So, and the same thing for most of the public offers we saw, related to the reforms that we see in that space. Even GTCO public offer last year was around 44 naira 50 kobo, and GTCO is trading today above 90 naira. So we could say that these reforms have impacted the market positively, and for both retail, institutional investors, even foreign investors, because, like I said, for a new investor that bought public offer last year, and it is not even up to a year, and they are seeing the share price double. So it signals a positive, momentum and sentiment to them. So, and of course, we're also seeing reduced inflation rates in the economy. And like I mentioned earlier, the more the economy gets better, most likely we are going to be seeing reduced interest rates in the fixed income space, and we could be seeing investors rotate their funds into the equity space, right? And going into the H2 proper, we're also seeing institutional investors, doing some rebalancing, looking at what they've done in H1, and positioning better for H2.
Oh, it's been interesting to see how, all of this plays out. But again, it's been a pleasure having you join us for this conversation. Oluwatobi Adesanya, the equity trader, Zedcrest Securities Limited. Thank you for joining us.
Thank you so much for having me.
A pleasure. That's it on today's edition of Business Edge. Follow us on social media. We are at News Central TV. Head to our website as well, www.newscentral.africa. Till next time, that's next week, I am Joanna Mustafa.